Incidentally, we've got our first caller for the day, but before I go to Shweta, who's calling us from Hyderabad, let me introduce who's going to respond to your questions today. And we've got Sameer Dalal of Natwar Lal & Sons Stockbrokers, and we've got Vaishali Parekh also joining us this morning. Good morning to the two of you, and thanks so much as always for taking the time. Let me go across to Shweta straight away. She's calling us from Hyderabad, and she's got a question, I believe, on Dixon Tech. Shweta, thanks so much for calling us. How can we help you today?
Hi Alex, thank you so much for taking my call.
Our pleasure.
And I'm holding Dixon Technologies of 15 shares at 15,839 price. Today I've seen a sharp decline. I think I want to know whether will it continue the profit booking, or should I book my profits and exit?
Yeah, that's a fair
And I
point.
also want to know, but I want to stay in EMS sector. So is it a good time to enter from Dixon to Keynes or Amber?
Okay, so it's a dual question, and generally I do not do this, but considering that you have quite a considerable amount invested in this stock, I'm going to do that. A quick view, Vaishali, on whether today's drop is something to be concerned about from a technical standpoint, and would you use it as an opportunity to exit if you've invested at levels of 15,839?
Very good morning, all of you. So yes, market is actually getting into a new round of selling pressure. And today's candle, it shows a little bit of weakness in Dixon. So I would definitely suggest to book partial profit. And if she still wants to hold, then I think 16,700 acts as a very crucial support, 16,700. So if those levels break further on, that could trigger further selling. So either book partial profit or wait for the stop loss to hit.
Samir, the second part of that question, of course, and I think this will benefit a lot of people because Dixon is a popular stock that a lot of people are interested in, but the EMS space as well, right? So the second part of the question was, should you exit something like a Dixon and find opportunities elsewhere in the EMS space? Samir?
Yeah, hi. That's for me. Okay.
Yes,
sorry.
yes.
So Dixon is actually a good company to have, but the problem is simply the valuation. Now, look, this is a company that has pretty much got orders from every cell phone company to manufacture in India. They have a lot of, like you said, on the EMS side, a lot of orders coming in. The problem is across the board, be it Amber, be it EPAC Durable, all of them are trading at premium valuations. So the question remains is, should you stay with the largest player or maybe try to go to somebody who's smaller and who could probably grow at a faster pace? I think given the fact that India is in a growth space and given that Dixon, which is the market leader with the largest capacity and the largest setup, I think they would probably stand to benefit the most. So from that perspective, I think I would stay put in Dixon. But if you're asking me, I mean, from the entire list of them, but if you're asking me, I find valuations ridiculously expensive. I agree earnings will catch up because a lot of the order flows that have come have still got to get executed, which means the operating leverage will play to some extent. But you got to remember, these companies work on very small margins. If you see the net profit margins, they range between 1 to 2%. So if for some reason something were to go wrong where they get stuck with something, I think it could take away the profitability. So I'm as bullish as I am on the long term of this space. I think valuation discomfort remains. So for me, I would not be an investor in these at this point of time. But if you had to choose any of them, I would choose Dixon.
Okay, so that was the view for Dixon Tech and a comprehensive view on the overall EMS sector and how it functions.